Hi, I'm Ed Carney, President of Apple Valley Chamber of Commerce. We are here today on behalf of 5 chambers, the Chamber Coalition of Dakota County, which is Hastings, Burnsville, Lakeville, River Heights, and Apple Valley Chambers of Commerce, all working together. We have this short here just to get right to the point, to the employee retention credit, and to really get some clarity with it. My guest right here is Scott Katerlich. He's the owner of a large CPA firm, and he's also our past chair of our chamber years ago, and he really knows chamber work in our business world. So Scott, without further ado, what we're here for is the employee retention credit. We just want to simplify it. There's all these acts out there. We've all heard about that. We want to stay on topic today and really talk about this. Who is eligible and what is it? If you could just give us that.
Well, Ed, right now, the only TV commercial that you see more than Flo and Mayhem insurance companies are the employee retention credit refunds. And the companies that are promoting the employee retention credit are basically stating that you may be entitled to up to $26,000 per employee of a refund of payroll taxes paid in prior years. That may be true. What we have to break down is, do you qualify, and does it make sense for you to contact them or your tax professionals in order to do the things that are necessary in order to claim those refunds?
Okay. Everything here is, the pandemic really started in March of 2020, but everything's going to be compared to 2019, the last normal year.
Yes. So what happened in March of 2020, the CARES Act passed a bill that included both PPP money being distributed out to businesses in order to retain and pay employees, but it also included a section called the Employee Retention Credit. Now, at the time when the CARES Act was first passed in March of 2020, if an employer took PPP money, they didn't qualify for the Employee Retention Credit. Later on in December of 2020, however, a new bill was passed which basically said even though you would have qualified for PPP money, you could also qualify for employee retention credit. Now, the main thing that you had to look at is, did the wages that I use in order to exclude my PPP money from taxation also apply to the employee retention credit? You can't use the wages that you paid for both the PPP forgiveness as well as the employee retention credit.
You just can't double dip.
You just can't double dip.
In the first act that came out, CARES Act or whatever, we had to have a 50% reduction, and then later it became like a 20% reduction, right?
Right. So the way the credit works is that in 2020, if your income dropped more than 50% compared to a quarter in 2019, so starting with the second quarter of 2020, if your income had dropped more than 50% compared to the same quarter in 2019, you would qualify for the credit. Also, if there was a government shutdown of your business or a significant change in how you operated, so for instance, restaurants and health clubs and physicians and dental offices also were dramatically affected by the government shutdown or closing of their business, they would qualify for those quarters. So there's two tests. Did the government shut us down, or did our income drop compared to 2019?
When you say government, it could be Minnesota governor closing. It doesn't have to be federal shutdown.
That's correct.
Okay.
It would have to be that level. I think you're going to run into trouble if you've got a local mayor saying, you know, that we have to shut down or be careful about how we operate.
Okay.
Though it has to be extensive and a true government shutdown. Now, there are also people that look at supply line disruption as a way of saying my business was dramatically affected by it. Be careful about the supply line. There still is not a lot of government regulation on how this whole thing is supposed to work. The bills get enacted, and now we've got to use what rules that we have existing. The regulations are going to come out and define those down the road. By then it's too late, and we need to make some decisions.
And then also, you might have only had 1 or 2 bad quarters. That's okay. It's all broken down by quarter, not by year, right?
Correct. So you're comparing the second quarter of 2020 to the second quarter of 2019, and did my revenue drop more than 50%?
Right. You might have had Christmas came in your industry, and all of a sudden you had a great quarter, and then the next quarter back bad again compared to 2019. So you might only qualify 3 out of 4 quarters, or 2 out of, or even 1.
Right.
Right.
And the way the credit is broken down is in 2020. if your revenue dropped more than 50% in a quarter compared to 2019, you would be able to use those wages to calculate up to a 50% credit on up to $10,000 in wages paid to that employee for the year of 2020.
And how long do they have to, when does this end where they can apply?
You've got until April 15th of 2024 to apply for the 2020 credit refunds.
Okay.
Okay. You've got until April 15th of 2025 to apply for the 2021 credit refunds.
Okay.
And so, and again, getting back to the credit itself, in 2020, it was equal to 50% of the $10,000. And so basically, you could get up to $5,000 per employee as a refund of payroll taxes. In 2021, they've actually increased the ability to claim the refund so that if your income only dropped 20% in 2020 compared to 2019, if your income dropped in 2021 compared to 2019 by only 20%, you would qualify for the credit. And the credit in 2021 is equal to 70% of the first $10,000 paid per quarter. So you would have the first 3 quarters of 2021, because the credits ended on September 30th of 2021, would qualify. So I could get up to $7,000 per quarter for the first 3 quarters of 2021, equaling $21,000. So that $21,000 plus the $5,000 that you could have gotten in 2020 gets you that $26,000.
That's where the 26 you keep hearing about.
Yeah.
So no matter what happens out there, don't worry about it. You're breaking it down first quarter of 2022 compared to first quarter of 2019. You know, second quarter of 2021 to the second quarter of 2019.
And it's very important that you use a trained tax professional to help you with this computation.
A tax professional is going to charge you what, maybe 5% for overhead and all of that?
It's hard. It's based usually on the hours that it takes to do those amended returns. And yes, it takes time, but it's not significant. Most of the companies that are advertising on television are charging anywhere from 15 to 20% of the refund amount, which is significant and probably more than any tax professional will ever charge you.
And can they do it themselves? Is it fairly easy to do? If it's a simple, you have just a few employees?
If you understand the rules, you know, you have to amend your Form 941, which is a quarterly payroll tax return for the quarters in 2020 and the quarters in 2021 in order to claim that refund. You have to do it correctly. If you don't, the IRS will send you notes saying you didn't complete this information and you will have to send more information.
And if you ever get audited, which is more and more likely when you start taking credits, correct? Then these other companies might not be there to help you out.
You'll want to, like I say, you want to use a reputable tax professional in order to make sure that these credits do qualify and that you get those dollars. Now, if you file for those payroll tax refunds today, okay, it could take up to a year for the IRS to send you these dollars. Now, the whole idea is that the refund that you were entitled to in 2020 actually reduces your payroll taxes for 2020. So if we determine today that I'm entitled to a $5,000 credit, I would have to amend not only the payroll tax return that qualified for the credit, but also my business tax return, and it's possible that it's a flow-through entity like an S-Corp or a partnership, which means I also have to amend my individual tax return for 2020, even though I'm not going to receive this refund until 2023 or 2024. So we're working with historical information, and we have to amend old returns in order to get this done. So there is an additional cost.
There we're getting in the weeds a little bit.
Yeah.
Let's say somebody's an employer. It's your employees for wages. It's for W-2 wages, not 1099. You might not be able to deduct yourself, but you can your employees, correct?
It applies to anybody who owns less than 51% of the company. So a 50% owner would qualify. The wages paid to that person, but not an owner that owns 100%, or a self-employed person would not qualify with the income that they earn. But the employees that they hire, those are the wages that we're looking at.
Well, thank you. We hope that clears it up a little bit for you. Call a professional. This is a real money, a real program, and the deadline is, like you said,
about a year. We got a year.
Yeah, so we have plenty of time, but do it right.
Yes.
Thank you very much.